Hello everyone and welcome to Day Trader S&P 500. Today is May 4th, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked market newsletters. And there you see our disclaimer down there along with our honor roll or top 10 market timers of the year awards. Okay, we also want to let you guys know that we do offer a subscription service, been around since 1997, and if we could just pull that up here, there we go. That's not it either. Well, let's see. We don't, here, it's on the other screen. Hello. Sorry about that, guys. There you go. Been around since 1997. We have annual subscription and monthly subscription, which includes daily reports and sometimes, like today, more than once a day. Today we had a pre-market open report early this morning, and we moved to our subscribers to a short position in the short and intermediate term time periods. Okay, so we are going to, before we do that, we want to thank you guys for subscribing to the channel, hitting the reminder bell, and the like button. And since it didn't show up, we have a picture of it. It's down there. It looks something like that. Okay. Appreciate you guys patronizing the channel. Got a lot of new subscribers. So thank you guys. We appreciate every one of you. Okay, today we're going to get into the S&P. We're going to get into Tesla and IWM, which is like the Russell. It's the ETF for the Russell 2000. Let's start with the S&P, and we don't need to go over all of that other stuff here. We're looking at an hourly chart, other stuff being all the way back to 1987 or even March 2000 lows, okay? The market, we're going to look at this from the most recent 5-wave advance, which is here. This is an hourly chart, and this is the April 20th low. Let me mark this for you guys real quick. Okay, and here we have a 1, a 2, and we labeled it wrong. We got a 3 up here, 4 down here, and a 5. Okay, that 1 could and should be here. It's 5 waves up no matter how you slice it. Okay, so we're looking at what degree of trend are we correcting, or is the S&P correcting? So we'll work our way backwards from the most recent 5 waves. We could go all the way back to 1987, which we kind of looked at on the Sunday weekly update. Okay, so we want to look at this advance. Let me just take those off of there for now so we don't have too many lines in the way. So what do we have as far as retracement of the most recent 5-wave advance? And let me get the retracement tool on there. There we go. And we can see it's more than a 786, okay? When this does retrace more than this, when we'll look at the next 5-wave advance, okay? So far, it looked like, and that's why we put it out, it looked like a series of 1s and 2s, like a 1 down, a 2 up, a 1 down, a 2 up, a 1 down, and 2 up. Let me show you guys that. I think I have the, yeah, there's a 1-minute bar going into today, and we had a 1, 2, 3, 4, 5, 1 down, a 2 up, another 1 down, another 2 up, and another 1 down and a 2 up. So we're setting up today at the open to have a wave 3 of 3 of 3, or a wave 3 at least 3 degrees of trend. They're small degrees, the smallest, but nonetheless powerful third of third wave. And that's what we got today. As you can see, these retracements are all 768, 786, and 618. Okay, so that's what we're looking at today. And I want to get into if we do correct more than this, which could happen as early as tomorrow, we would have to take out this 4119 low, okay? Because second waves cannot retrace more than 100% of the first wave. Okay, so that would be 1, 2, 3, 4, 5. That would be 5 ways up. We get a move below here, and that would take it out. Okay, and then we'd be looking at correcting something much more, which would be the 5-wave advance of the next degree, which takes us down to the March 25 lows, and that's a 1, 2, 3, 4, 5, and that's what we'll be looking at there. Once this low is taken out, just in case that happens tomorrow for you guys, once this 41.19 or 18 is taken out, these are the targets we'll be looking at, because we'll know that the market is correcting more than just this. Okay, hope that makes sense. So let's move on to the 5-minute. Okay, here is that opening high, all-time high on April 29th within one tick. There's the one tick, and if I did a minute, it'd be the same one tick. That our spiral came within absolute perfection. Okay, we had a 428 turn date. It opened on 429 at an all-time high. It's been down ever since. Here's that series of 1s and 2s at different degrees of trend. There's a 1, there's a 2, there's a 1, there's a 2, there's a 1, there's a 2, and we showed the high level of retracements. They're trying to wipe. See, they try to. Here they go. Let's wipe everybody out, and then let's take it down. Let's wipe the shorts out, and then let's take it down. Okay, so it's been, by the way, gap up, gap down, gap up, gap down. 4 days in a row. Okay, will they gap it up? We'll see. All right. The next few days should be interesting to say the least. But you can see this wave 3 of 3 of 3 began here. Okay, and it finally traced out 1, 2, 3, 4, 5. So let's get a retracement for wave 4 within that 5-wave decline to see where 4 ideally goes, and it could be complete right here. You see it. It took out the 382. It's almost at the 50% retracement, which is 41.68. I believe this closed at 41.65 or somewhere near there, within 3 points of a perfect 50% retracement. Here is the 618 at 41.78, and if they want to run the shorts out again, they can take it up to 41.91. Okay, so we'll see how that plays out. I think we had a multiple within this this 4th wave. Let me see if I can get on it here. Yeah, there we go. It's almost an exact. If this is an A, B, C, A up, B down to here, and then C, it equals C equals 1.618 at 41.66, and it hit 41.65. So it could be complete right here. They gap it down tomorrow. We can look at where 5 would be, and that's what we want to look at. Let me get these out of the way. Remove that, and there is 1 and 2. There is 1 and 2, and let's get this. Here we go. Extension. And there's 1 and 2. And if 4 ends where it did, we're looking at 41.23 or 40.97. Excuse me. That may not be exactly correct, and I think I have a picture of that for you guys. So I think it was right around 4100, because I don't know if I put this right on those actual highs and lows. Let's see if we have that here. Yes, we do. Okay, here is that 5-minute bar. There's the all-time high within 1 minute of perfection. There's 1 and 2, 1 and 2, 1 and 2. Here's 4, 41.65 is actual. 41.68 is the 500 retracement, and the Fibonacci 618 is 41.78. Wave 5 gains equality with wave 1 at 41.26, and a 1.618 multiple at 4100. So that's what we're looking at in the S&P. We'll see how this plays out here. Like I said, 4 could be complete here between the 50 and the 382, or they could run it up a little bit more. Even if they close that gap, that would be a 786. Wouldn't be normal for a 4 to go that high. Usually the 2s are the ones, so be prepared. We're looking for this 5th wave down to one of our targets here right at 4100 or 4123. Okay, that's the near term on Tesla. I'm sorry, on S&P. Let's look at Tesla. You can see we're at a daily bar chart here. We have our 5 waves down for A. We have an A, B, C up for B. And we're watching this unfold here. It's starting to unfold nicely. It was nice that it took out this low after that big move up on April 30th, okay? And you can see here, from here, we've got a wave down and an up, and there's where it gains equality, and the post market is on there. But the 1618 would be the next target, which is 610. Okay, ultimately this goes down to 418. It's possible that it could go 1618 multiple at 193, but first things first, we did this, took out this low. We got to take out that B wave low, and then we're looking at 418 after we take out the A wave low. It's a 535 correction. I'm going to look at this a little closer. I think that was the 14th. Let me look at that, see how much has changed. Yeah, we could call this a leading diagonal triangle with overlap of wave 4 to wave 1. Let me put that in there for you guys. That's the only time that wave 4 can overlap wave 1. Okay, so we would have a 1 here, a 2 there, a 3, 4 overlaps 1, and a 5 down there. Okay, that would be 1, 2. Here's where 3 gained equality with 1, and it has since gone past that. Okay, so we would want to move this down to there. Okay, and let's see the 3 extend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, we could call that an extension here. So let's update our chart here. Okay, let's get 5 around there. There we go. 3 down to here. We had a little extension. All right, there we go. And this is what we're looking at to retrace this 5 wave decline. And it's almost at the 382 at 675. Now that's the bigger picture. My bad. Let's get that out of the way. Let's move that out. Remove. Okay. The 382 is at 694. The 50% is at 705. And the 717 is at, the 618 is at a price of 717. Okay, so this looks like it almost put in the same series of 1, 2, 1 and 2 and 1 and 2 here, and then it extended out in the third wave, and we can count 5 waves down there. 4 had to hold below the wave 1 low, and it did, as the red line pretty much marks it right there. Okay, so that is nice and tidy. And here we go with the 5th wave down. 1, 2, 3, 4, 5. Yeah, look for a counter trend bounce before this thing extends down to our target of 418. Let's look at the IWM. And I don't want to take you guys through everything started at the March lows. And the other indexes made a later all-time high. But if you'll recall, if you were following the Russell or IWM back in 2020, when the indexes were making new highs through the summer and the fall. There was a high in June. There was a high in September. The IWM didn't. Its high was in 2018. It was lagging. So the IWM and the Russell are both lagging. It looks like that high is on March 15. And we can count 5 waves down and 3 waves up. Okay, so let's get a retracement of that. And if we zoomed out, you guys could see a classic head and shoulders pattern. We won't get into that. It's there. Everyone can see it. And there's a wave 1 down. And there we have an A, B, C. And surprise, surprise, they took it to the 786 and then they spiked it above it again just to shake out the shorts before they take it down again. Okay, so we have a 1, 2, and we're starting 3. 2 again is more than a 786 retracement. Let's get our multiples in here. Okay, and there is 1 down. There is 2 up right there. 3 gains equality with 1 at 204 and a 1.618 at 188. Okay, that's what we're looking at there for the Russell. You can see this is 1, 2, and then 1, 2, 3, 4. Yeah, that's subdividing out. 1, 2, 3, 4, 5. Yep, and that's overlap. So it's 1, 2, and then 1, 2, 3, 4. Third wave is subdividing or extending. Let me mark that for you guys so you get a better picture of the near term. Okay, this is a 1 down, This is a 2 up, and then we have 1, 2, 3, 4, and then that would be 5 for 3, and then 4, and then 5. Okay, so this is 1, 2, 3, 4 within that third wave as it is extending. Okay, so that's what the IWM looks like. Let me see what else we had here in our little bag of goodies. We went through the 1 minute, the series of 1s and 2s. We went through the update there. There is our Fibonacci time spiral with a slippage of a minute. And this one here from the March 4 low, which I just did. I've been doing spirals, as you know, for over 20 years, since the 90s, 1990s that is. This one caught with slippage of none, slippage of none, slippage of none, slippage of hours here. I called it 1 day, but that 4.6 and 4.7 was 2 days of sideways. And then we had 4.28, and the all-time high came in at the open on 4.29. Okay, and then the other one was this one from the September 2020 high, wave 3. This one caught alternating low, high, low, high, low until it got the fourth wave low, which was a Fibonacci 55 days with a slippage of 2 days, or was it 3? Where is that? Yeah, 3 days, and then it started catching all these highs. And again, we had a slippage of to get from 423 to 429. The other one was more accurate, but this one is catching the highs, much like the spiral I did from 1999, and it lasted until the year 2006. So that one was 7 years. This one so far is 7 months. Okay, that's what we're looking at. So in review, we want to look at this is where we are right here on a 1 minute bar, and we're looking at a series of 1s and 2s. And is that the one, or is that's not the one? That's not the one. My apologies, guys. We're going to get back to our main chart over here, and here's where we're at here. Okay, 4 could be complete, maybe a little higher to the 500, 618, or heaven forbid the 786, and then 5 down. So until next time, take care, everyone.